Hello and welcome to Pro Trader Strategies market commentary for Monday, July the 29th. I'm Eric Wilkinson. Yeah, you might recognize me as the Wolfman from some mainstream media, but I'm here to teach you guys some different option strategies you can implement into your portfolios, but please do that in your own way. Also remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right. Having that out of the way, we don't have a whole lot of economic data, but we do have a lot to talk about in terms of the economy, I should say. A lot of Fed governors last week talking pretty bearish on the global economy. Not so much here in the United States. They actually are saying here in the United States we're doing pretty well, but across the pond and around the globe, we're really seeing economies struggle, especially their like corporate bonds. Everybody is pretty much in negative territory. We're seeing the 10-year invert with the rest of the yield curve, meaning we're seeing Fed fund futures being above 2% and the 10-year being at about 0.68%. So much more low or much lower than we were seeing in the Fed fund rate. That's part of the inverted yield curve. We would expect interest rates to rise outside or as you go out the curve on the longer durations. We're seeing an inverted where it's shorter. And that's because a lot of global economies or people elsewhere look at our bonds and see them as pretty attractive because they're seeing negative interest rates there. People are starting to talk about negative interest rates here. I didn't think we would see that back in the day. I don't think we're going to see that going forward either. We may get very close to zero, but I don't think that we're going to see negative interest rates here. That being said, interest rates are going down. We're talking about the Fed governors coming together in a couple of days here and are going to determine interest rates. It looks like they are going to drop them by 25 basis points as a precursor to the global slowing down of the economies across the pond and maybe even here. I'm not really seeing it here so much. And ultimately trying to drive inflation. And we've seen that really these interest rates are not driving inflation like they would like to see them to do. I don't know that even lowering interest rates at this point is really going to drive inflation. They're not really seeing inflation over in Japan, and they've had really low interest rates for about twice as long as us and haven't been able to spur that inflation. So whether or not that's going to work out is yet to be seen. Let's just leave it at that. All right. Crude oil is still right there at that mid-50s area where we threw in that purple line. We've just started seeing where support and resistance was kind of getting laid out right there. So I threw down that line that doesn't really line up with any Fibonacci. You can see it right here. This little purple line is what I'm really referring to. We're really not seeing any type of we're not seeing any Fibonacci's line up with that. It doesn't line up with anything really around the volume profile. It is just becoming a line in the sand that we need to keep an eye on. And it's right there. As you can see, I kind of drew that line in there. And it has been acting as support and resistance quite a bit there. So I'm expecting that to kind of hold. Bulls are defending that, and it's lining up right around that $56 a barrel area. So they're trying to keep it up in the upper 50s, where I was expecting us to roll down into the lower 50s. But you know, now that we're starting to see some bigger drawdowns in this crude oil, that's showing demand. You know, we could very well see it start creeping a little bit higher, especially if interest rates start lowering, try and spur some inflation. Gold's going to start driving higher. Weaker dollar, that should drive bonds higher. That should drive bonds higher and crude oil as well. Along those lines, we should also see gold futures start to push a little bit higher also as the dollar starts to weaken. I would not be surprised to see some testing of the 52-week highs here. All right, we've got the bonds moving a little bit higher. They haven't really decided to get off their rocker too much, but again, these Fed governors talking about lowering the interest rates to somewhere around 1.25% to 1% in this easing cycle that we're going to be looking at coming up here, starting with Wednesday's 25 basis point cut. So they're looking like they're going to want to cut all the way down to a 1.25%. All right, and then we've got on the VIX. VIX is moving a little bit higher. It isn't in the teens, but just trying to crawl up there. We've got the Dow Jones Industrial Average up about 100 or up 70 points, let's call it. I think that's more of a flight to safety. People a little bit worried about what's going to happen this week with the Fed and everything else, some of the economic data points that we're coming out with, and it looks like it's a bit of a rotation out of tech, which is a little bit more volatile, and into some of the blue chips, which is what we're seeing over there in the Dow Jones Industrial Average. You got like the IBMs, Apple, and some of the main companies that have been around for a long time. They're the bellwethers, the ones that kind of are able to fight through decades of recession and or booms. Whereas the tech sector has a lot more volatility in it. It is more economic dependent and like I said, a little bit more volatile. They need a good economy to really start driving, and I think we're seeing a bit of a sector rotation going like that. That's why we're seeing the NASDAQ off by about 35 points. It's about half back of what it was. I think it was closer to almost down 70 on the day a little bit ago. E-mini S&P is driving back as well, almost unchanged on the day, and this is what I was talking about. From the open, the market slammed down to the lows of the day, but we're starting to see a bit of a recovery. There's not a whole lot of economic data out today. Like I said, that's going to make any type of market move. It is really going to be about what the expectation of the FOMC is going forward. And right now it looks like they're going to be cutting 25. And some people are even hinting that it might even be a 50 basis point cut. I think that's a little bit drastic right off the bat, but who's to say? I don't even know at this point what they're trying to pull off, other than try and spark inflation to get things moving here a little bit. All right, a couple of trades that I haven't talked about. Friday was a little bit crazy. My computer wasn't wanting to video. I've been having some issues with that, but a couple of those trades I did tweet out, told you guys directional, and I've got a theme going here where I'm just playing everything to the upside, and it's been working out quite nicely. This Amazon actually was directionally against me, but again, we've gotten that volatility crush coming out of it, and it worked out. I think I sold the 1835 puts in there that would have expired on Friday, so you got all that theta contraction and the volatility crush that worked out for that trade. I did basically Amazon, Intel, McDonald's, and Google. So those are really all the ones that I got. They're directionally right for the most part on the rest of them. The only one that wasn't was that Amazon trade, but again, I got the volatility crush and everything else that I talk about in my webinars going in my favor. And that's about it. I'm going to be looking at several again today, so I haven't added any long-term trades. I'm going to be taking advantage of these earnings going forward probably, especially right now because we're in the thick of it. We've got Under Armour, we've got Procter & Gamble, we've got Cummins, which is CMI, we've got ConocoPhillips, COP, Merck, what else? Oh, Xerox. You can trade Xerox still, maybe not in the options. They don't have a whole lot. And then I'm sure everybody on Twitter is going to be talking about Beyond Meat today and how their earnings are going to come out. I'm not going to trade Beyond Meat, and I'm not going to trade Xerox XRX. But I probably will be looking at playing Under Armour to the upside, Procter & Gamble likely to the upside. Cummins, I might hold off on that one. They're engine makers, and I don't know that the autos have been doing that great. ConocoPhillips, maybe an iffy. Merck, probably to the upside. All right, and that's about it for the market commentary and what I've got going on. I hope everybody had a great weekend. If you can't take that, take it easy.